Santosh Rao as well and figure out what he's making of the market setup right now and where he believes money is to be made. Santosh, hi, good morning. Good to be speaking with you. Santosh, concerns around the AI rally, you think that they've abated a little bit now that we have some amount of semblance coming in for the global markets led by Korea?
Yeah, good morning. Well, the AI is still very strong. AI momentum is still strong. We're seeing some AI supply chain bottlenecks you saw in the case of memory. So that went up, spiked up quite a bit because there's tremendous demand for that. So we're seeing pockets of that. But overall, I think the demand for AI will continue. We are still probably the third or fourth inning of a long game here. So I think it's a long way to go. Yes, it's going to be volatile. It's going to be up and down. There are concerns about the capex spending and all that, but the demand is there, so, and it will continue to do. But the bigger news, bigger takeaway from the market is that the market is broadening. AI-enabled stocks are doing well, other areas are doing well, and that's good news. I mean, that's a healthy thing. It's a healthy melt up, you can say. That's what's happening in the market. And it's step by step. Healthcare is participating, by financials are participating, transportations are so all that has good signs that the economy is in good shape, is expected to do well as we enter the second half of the year.
Santosh, hi, morning. You're seeing good labor market numbers also coming in, and the 10-year yield is also spiking. Do you now see that a rate hike is now around the corner?
Yes, I think inflation is proving to be very sticky, and that's going to stay there. And the Fed chair, Kevin Warsh, has pretty much said that his focus is just going to be on the inflation, not on growth and not on other areas. It's just going to be inflation. So he's going to monitor that very closely. So if inflation stays sticky, I think, and the prospect of more inflation coming in, with energy prices going down, there's going to be consumption going up and things like that. There are a lot of inflationary forces out there, so that might keep him on either on hold or one hike this year. I'm in that camp. I know Bank of America has 2 or 3 hikes, but I think one hike makes sense based on my read of the market. But definitely a hike if there's no cut for sure, and if anything, stay status quo, wait and see, or raise one by the end of the year. I think that's where we are at this point. But definitely the probability of a hike is more has increased.
Hi, Santosh. This is Harsh here. So when you're looking at a hike, how should one look at gold, silver? Because they've fallen quite precipitously. What next for some of the precious metals? And how do you read into equity valuations, therefore? Give us a sense as to how you're probably allocating across asset classes.
Yeah. See, one good thing in the market and what's holding up the whole thing is strong earnings growth.
Yes.
I think for 2Q, it's expected to be 20% plus. And also going into 3Q, also it's expected to be 20 plus. And we're going to end the year also 20 plus percentage. So overall in EPS growth, I think that's what's holding up the market. And it's kind of offsetting any multiple compression on the other side. So I think that's the good part about the whole thing. But other than that, I forgot the first part of your question, but overall, I think it's yeah, the valuations you're talking about. Well, valuations are high, but that's okay. Like I said, it's supported by good earnings growth. At some point, it needs to take a break, and it will, like all markets do. But right now, the path of least resistance is up only because the fundamentals are good, the labor market is good, the data coming in is very good, and interest and inflation is kind of sticky, but not jumping up, but it's not coming down. It's kind of sticking there. So it's okay. It's manageable at this rate. So let's see if how it goes. If energy prices come down and the Middle East tension dies down, I think that'll be helpful. I think that's a bigger concern. The macro geopolitical risk is a bigger risk than any internal risk in the US market. So I think that's where we are watching what's going on there. But let's wait and see how the things go. We have a jobs report coming up on Thursday. Let's see how that comes out. But overall, expect it to be trending up. So I think that's a good sign.
Look at rate hikes and impact on precious metals.
Yeah, I think that's because, yeah, that was your question.
Yes.
I think dollar falling, or rather dollar going up, is definitely works against all the commodities, and that's what you're seeing. And as the demand for US interest rates stay high, the yields stay high, and it will because the rates are going up. Dollars are going to come in. There's going to be more demand for dollars, and the dollar is going to keep going up, and that's negative for the commodities market. So I think that's what you're seeing. It's going to be negative for that, and it's also negative for the emerging markets. So a strong dollar doesn't work in favor of that side of the equation. So, but you're going to see that effect for the commodities. It's going to come down.
All right, Santosh, thank you so much for joining us this morning, giving us that perspective bright and early.
Thank you.